How's it going, guys? Welcome to another video. Thanks for tuning in. We're going to be going over 3 stocks that you should be watching for next week. And these are going to be some pretty high implied volatility stocks that are trending and they look pretty good to buy options. Now, normally on this channel, we sell options, but here are 3 stocks that you should buy call options for. And it'll be a pretty good risk reward ratio. So first stock on our list is going to be Nikola Motors. As we can see, it's up around 22% on the day, including the after hours. So pretty big move by this stock. And why exactly is it booming? So we can actually see that Nikola Motors, let's get rid of these ads, are surging 18% after company delivers its first EV truck, and they actually say more is to come. So Nikola Motors, this stock has been beaten down pretty heavily if we take a look at the charts, mostly because of the former CEO Trevor Milton doing all that shady stuff, basically tricking investors. So this stock went from around $90 per share. I think it went from 90 somewhere around between $90 per share, all the way down to around $10, $9 per share. And we've been recommending this stock on our channel ever since this stock was $9 to $10 price range. And this is a really good stock that we've actually been selling cash secured puts on, and we've been making a lot of money. But right now, things are looking very good for the outlook of Nikola Motors. I've been a believer in this company. It is a high risk, high reward stock, of course, because it didn't really have any vehicles delivered. But what I've noticed is they've been hiring like crazy here in Arizona. Thousands of job openings have been popping up. So why would this company be hiring hundreds of thousands of employees if they're still a scam? So things are looking pretty good right now, and it's only up around 18% on the day. So this is a good opportunity to buy some long-term call options. So we can go maybe like around a year out. We're going to be buying some leaps, and as you can see, these call options are going to be fairly cheap still right now, around around a few $100s. So I would say like a $20 call option for $266 would be pretty reasonable, giving in a year expiration date. So basically just buy and hold this contract for the long term, and basically don't even look at it, because who knows what will happen. You don't want to sell too early, and you also don't want to panic sell. So that would be my take right here. So the next stock on our list is going to actually be AMC, sitting at a price point around $28 per share, and we're going to be doing a risky play on it. We made money on the 145 strike calls. We basically doubled our money. We got out of that pretty quick. When we saw profit, we took it. But now, take a look at this. These contracts are now worth $22 per contract. And we take a look at barchart.com's highest implied volatility stocks. AMC is on that list with the 145 strike, an implied volatility of 262%. And we take a look at the open interest, 171,000. So pretty high open interest still. But it is going to be a high risk, high reward play. It's only going to cost you $22, and you're giving a month of expiration, the January 21, 2022 expiration date. So this is going to be a pretty high risk, high reward contract. And once you see profit, take it, because I don't think the stock is going to go to 145 in the next month, but you can. That doesn't mean you can't make money on this option. It just needs to be a big move upwards within a short amount of time, and the value of this contract will go up as well. So if we take a look at the options profit calculator here, we can see all this green is what we are looking for. So say by next week, this stock goes to, I don't know, $37 per share. You're doubling your money by, what's this, December 27th. So if the stock makes a $10 price movement upwards, you're doubling your money on this call option. And all it's going to cost you is $22. So we just need just a really big burst of movement, and we might see it next week. We might not, but we're not risking that much money. $22 per contract. Don't throw too much money into it. It's gonna be high risk, high reward, as we said. And if you're up a good amount of profit, just take it. Don't get too greedy on this trade. Last but not least on our list is going to be, of course, it's going to be the VXX, the volatility index, also known as the fear index. Because we take a look at SPY, we're at all-time highs, and we're approaching the end of the year. So this means that people might start taking profits. They might cash out their investments for tax loss harvesting purposes, or they just might be fearful from the new coronavirus Omicron variant. So we're going to be buying some VXX call options, expiring, let's say, there's a little glitch on Robinhood, January 7th, 2022. And we're going to be doing, these contracts are going to cost less than $100. So you could buy a few of these. So you could do like a $21 contract, maybe by, I don't know. It depends on how big your portfolio is. For me, something safe would be like 10 contracts as a good hedge for your portfolio. If you have a smaller portfolio, maybe 5 contracts or even just 1 contract if you only have a few $100. But this is a hedge position. We don't want a huge market correction and lose a lot of money. So we're going to be buying some VXX calls, because when the SPY drops, the VXX will rise in price. So buying call options on the VXX is going to hedge our portfolio a little bit and give ourselves some downside protection. So why not buy SPY puts? Well, this is going to be a bit cheaper. The profit reward is going to be a little bit better by playing options on the VXX. And it's going to be relatively cheap as well. $93 per contract for a $21 call option expiring in, 2 weeks? January 7th is in 2 weeks. So this is going to be good for downside protection, help you guys prevent that any losses that may occur within the end of the year volatility. And overall, it's just something that you got to do every now and then to hedge your portfolios. So that's about it for this video. 3 options plays that you should watch out for next week. I might be playing some of these, I might not. As a disclaimer, these are just recommended plays by me. I'm not a financial advisor. Take it with a grain of salt. Thanks for watching.